Welcome back. I got some really good ones for you today. But first, I hope you've been having an awesome week so far. Happy Thursday. A lot been going on in the markets. Let's dive right into it, shall we? Stock market. 3 major US stock indices all put on insane gains today. Massive moves to the upside. That NASDAQ moving up over 7% today. To put things in perspective, the NASDAQ might move 7 to 12% in a pretty typical year. We saw that today. So insane moves in markets, a lot of volatility, not just in the stock market. We also saw that 10-year yield in the bond market, which was over 4%, drop all the way down to like 3.8%. Almost a 30-something, almost a 40 basis point move lower in the 10-year yield. Historic. You might see that once every 10 years, 20 years, 30 years. And you might see moves like you saw today in the stock market once every few years, once or twice every few years kind of thing. So pretty insane moves. Crypto, no exception to the volatility we've been seeing. FTX, a major crypto exchange, imploded a couple days ago, resulting in yet another liquidity event. Latest casualty in the crypto bear market. We've seen Celsius, Terra Luna, all of these crypto banks that are essentially leveraged to the price of Bitcoin or other cryptocurrencies being hit with more margin calls, forced into liquidation. When you saw Bitcoin take that massive tumble yesterday and all your favorite altcoins dropping as much as 20-30%, that's not just a bunch of traders waking up one morning and being like, oh, time to leave crypto, I'm out. It's these massive players that have leveraged positions. So we're talking about like they'll put up $50 million and then take a $250 million position to the long side in Bitcoin or these alts. They just have insane leverage because they're able to essentially get loans against their principal, their stake that they originally started with. So it's all fine and dandy, and they're making insane gains when they lever up and really start moving to the upside or just downside too. Although, side note, I don't believe there's very much short interest in the crypto space. I don't think there are a lot of vehicles for people to short Bitcoin or short Ethereum, let alone a lot of these other ERC20 tokens. So I'm not really sure how much of a bull, bear, short, long tug-of-war game you have in crypto, but you do have a situation recently where all these banks, like I said, are super levered up. They have way more on balance sheet than they actually have cash. And when those positions move against them, the people who loan them the money to lever up with hit them with margin calls and say, dude, I need my money back. I don't think I'm going to be paid back on any of these loans. I'm here to collect. I need to see a certain amount of cash in your account like yesterday, like in the next 5 minutes. And if I don't see the amount of cash I need to satisfy the margin requirement, I'm going to start willy-nilly liquidating your crypto position. So kind of give you an idea of what happens when these crypto bankers start to implode. It kind of has a domino effect, works its way through the system. You go into a form of price action called capitulation. You saw that yesterday. So what's capitulation? Well, first of all, what's price action? What it's doing. Whatever the security is doing. Is it, wiggling and going flat? Is it going straight up? Is it going straight down? That's kind of price action. Well, yesterday we saw straight down. That's called capitulation. Saw it in the crash in 1987. Saw it in the beginning of 2020 when markets were starting to smell the coming pandemic. Post 9/11, we probably saw capitulation in risk assets, the 2001 recession. And capitulation is just where that security, whatever it is, cannot catch a bid. So stock XYZ, we'll call it, is just going straight down, and there are just no buyers stepping in to put a floor under this thing. capitulation. You know, the chart, you bring up the chart, it just looks so nasty. And it's almost like the fall was so bad that the chart is like broken and kind of has to clean itself up. So when your chart looks very broken, and then maybe you see dead cat bounces, which, you know, we're seeing dead cat bounce type price action today as a lot of these cryptos come off of their lows. Crazy. So capitulation was yesterday. Opportunists did step in and buy the dip. I'd say a lot of these altcoins and Bitcoin are, you know, bouncing back pretty hard today. A lot of 30, 40, 50% moves to the upside. Another reason we're seeing so much volatility in crypto is a lot of these altcoins, you know, used to be worth $1. They're now worth a penny. And that jump from 1 penny to 2 pennies is like 100%. So we're just seeing insane volatility in the crypto space. Ultimately, because the Fed has been tightening all year, but we'll get to that in a minute. And that's been letting a lot of air out of these speculative tech stocks and letting a lot of air out of commodities. And then you had a bunch of liquidity events. So like these big crypto banks going under as well, it just crushing people. Michael Saylor's out on CNBC today, kind of trying to pump Bitcoin. Look, I'm sure he was hit with a margin call today, but he's pushing bees. You know, we're peasants compared to the $1 billion gut check, you know, hook he took over the summer. He took a pretty good jab over the summer, $1 billion. You know, so that's what happens when you see these massive unexpected moves in crypto and these liquidity events. You see these big players just, you know, swinging billions in both directions. But you got Michael Saylor out on CNBC today talking about how in order for crypto to move forward, it needs to be more or less legitimized, brought into the fold of institutional banks. We need to make these cryptos registered securities. In my last video, I did altcoins searching for deep value on the furthest frontiers. The last video I did about 8 days ago, I talked about how these are non-registered security tech stocks, and that just makes altcoins through the eyes of an institution look so nasty, you know, so dirty, like almost like a pink sheet or over-the-counter traded security, you know, just not even registered. You know, 1 minute your money's there, poof, it's gone, no insurances, no stability. So Michael Saylor's talking about crypto going from a young adolescent into more or less mature future of finance, tip of the spear type position. And I'd say that's ultimately the direction Bitcoin and cryptos are heading, all right? The days of the cyberpunk, crypto hornets, you know, white hat, black hat hackers only using Bitcoin on the dark web. Look, that's coming to an end, all right? In my opinion, it's kind of sad. Like, those are the guys that got it going, but it's time for Bitcoin and cryptos to grow up, and they need to be with custodians that come with unlimited buying power and a monopoly on the use of physical force. So that would be like BlackRock, JP Morgan, Fidelity, Goldman Sachs, and they're all in the building. With that being said, I didn't think Bitcoin was going to dip below 17,500. I don't really think many players were, but I guess it's the market's job to do as much damage to as many players as it can all the time. And as soon as you're approaching markets through that lens, I assure you, you'll start to do a lot better. Your favorite asset will get there, but only in the most painful way possible, okay? We have to take all these retailers' money. We got to throw the guy who is here just to make a quick buck. We got to throw him out, take all of his money. So the markets are doing their job, which is as much damage to as many players at the table as they can. But ultimately, you do see risk assets moving to the upside. You do see the dollar weakening. You do see the Fed beginning to flip more dovish, okay? So that's big. Fed President Barkin came out today, I believe, kind of talking about taking interest rate hikes off the table, maybe pausing interest rate hikes for 2023, all hyper bullish for risk assets. Gonna stoke inflation if the Fed starts to cut interest rates or really begin to reinflate its balance sheet. Like, I mean, not that they ever deflated it, but really ramp that up again. Going to put a lot of downward pressure on the dollar. Kind of got a preview of that today. Going to make inflation worse. So don't be fooled by the headlines that are telling you now that inflation's going down, stocks can go up. Stocks love inflation. And according to what the Fed's telegraphing, we're about to get a whole lot more of it. And in the meantime, I think the markets are starting to back off with these, hawkish interest rate hike expectations. I think the market is starting to realize that a terminal Fed funds rate of 4.5% to 5% next year is probably not looking so likely. So the more the Fed flips dovish and stops acting so aggressive in these interest rate hikes, the further up these risk assets are going to go and be able to start recouping a lot of their losses. I would say when the FOMC meeting goes down next month, the Fed will raise interest rates. 50 basis points is my prediction, not 75. 75 basis point hike still on the table, but I think we've reached peak hawkishness, and I think peak hawkishness was tried to be on Monday, but then that liquidity event happened in crypto, so it looks like peak hawkishness was like yesterday, in my opinion. I could totally be wrong, but if peak hawkishness was yesterday, and as time goes on and we move towards the rest of the year, the Fed starts to act more dovish, more accommodative, that's just going to make asset prices go up more. Crude oil, NASDAQ, Bitcoin, gold, all want to see the Fed pivot, all want to see the Fed take interest rate hikes off the table, and the Fed's starting to say, we might give you that. Really all I got for you for right now. We're just going to keep going, all right?